In this video, I'll set up a trade in which you're risking 1 to make almost 4 with probabilities on your side. We'll be using only free indicators. I'll link all of them in the description box so you can follow along. There's 4 in total, 1 more beyond what you see here. The trades that we're going to focus on are inside of the major SPY sectors. So let's start first with loading on the last indicator that you don't see right now, which is our utility labels indicator. I'm going to load in utility label sectors. This is a way to very quickly gauge which sectors are in a stage of acceleration versus a stage of deceleration. Now, as we see, XLK, XLF, XLY, XLC, XLI, XLE, XLU, and XLB all have this green label. That tells us they're all currently in a market stage of acceleration. So if you're a long only trader, you're looking for long side opportunities, that's the first place to take a look at. The second place on this list would be XLV. You can see that the label is yellow. That's telling you that the market stage is currently in a stage of accumulation. That means it's gathering the energy to try and switch to this market stage of acceleration. And finally, you have XLP and XLRE, which currently are in their market stage of distribution, which means they're still chopping around more towards the bearish side. So with that bias, I started with the focus on all of the green labels. I'll spare you that portion of the research, but what I did next is I loaded in our seasonal analysis indicator, which is a very quick, easy way to understand what tends to happen in the stock as you get through certain points in the year. Now I'm currently looking at 20 years worth of data, and let's come into the daily time frame instead of the weekly. And you'll see that the labels very quickly tell us what we can expect for certain months. So for example, if September has a yellow label, that tells us September is a relatively weak month for this particular sector. The first number in these two sets of numbers, the first number tells you how often, the percentage, it tends to close above where it opened at the beginning of the month, that particular symbol. So how often does this stock tend to close up, meaning make an upward move? So 28.57% means XLC in the month of September, looking back almost 20 years, closes above where it opened at the beginning of the month only about 28.5% of the time. So more often than not, September is a down month. Now, how down, or what is the average move? Well, we can see that number in the next set of two numbers here, which is a minus 3.36% looking back 20 years. So when we combine this, what I'm looking for is a green label for these latter months. So I'm looking for October, November, December to be green. If we were to quickly cycle through this, you'll see that that's not the case for most sectors. Most sectors don't have strong months in the latter half of the year. Now, there were a handful that stood out. So you had XLE, for example, which stood out. Now, XLE, October, November tend to be okay months. However, you take a look at the chart of XLE, and it's nothing that I get excited about. The next one that stood out was XLF. XLF, October, November, fairly healthy months. XLF would need to wait for a little bit of a pullback, but has a strong close into the year, October, November, December. So definitely one to add to the radar. And the next one is the one that I think is currently setting up a trade, which is XLU. So XLU, you take a look, October, November, strong months, December starts to teeter off a little bit. So this is very much a shorter term trade. And to add more context, take a look at September, which tells you September tends to be a so-so month, which is exactly what's happened here. Beginning of the month was right here. And you take a look at where price is currently at, that tells us we should expect price to either close or chop around into the final few days of September, looking to close somewhat below 84. Now, with that in mind, if we were to load in our next indicator here, which is our market pulse. So our market pulse very quickly tells us the market stage, which we connected to the utility labels earlier. So now that we've finished with the seasonal analysis, I'll remove that indicator, and we're going to take a look at the market pulse in conjunction with a momentum indicator called the momentum cross. Both of these are free. The momentum cross is simply looking at the 3 EMA crossing above the 8, and the market pulse is a quick alternative for moving averages, which I think is far more effective. Now you take a look at XLU, and I think XLU initially in August had a lot of signs for bearish activity. However, you take a look at the past few days inside of XLU, and I think you can make the argument that you're starting to build a little bit more bullish activity here. Now, the particular entry for this trade that I'm looking at is not with this close bar, but I'm looking for a slight pullback closer to the 84.50 mark if you could. Now, we just talked about how 84 seemed like a potentially likely place based off of the seasonal analysis. So 84 would take us down to about here. So call it a zone of 84 to 84.50 as where you'd like your entry. Now, in terms of my stop, I'm looking for the stop outside of this low here near 83.65 to below 83.50 if you can afford that. That gives you a stop range of about 85 cents. So if we were to mark the entry that I'm looking at is a zone between 84.50 and 84. So basically in this, just a small pullback back to the market pulse line. That allows you to skew the risk a little bit more in your favor. I like that idea. The stop below this candle's low, but trying to be below 84.50 if you can. Now on the upper hand, the target that I'm aiming for the first target, is 85.95. That's right here, right below this 86 mark, right below this high. So looking for not a retest of the high, but falling slightly shy of it. If we were to hit that T1, that would mean that our first trade is risking 85 cents to try and make 1.45 for T1. And T2 that I have is looking for a high above this previous high, but just a slight high at 87.80, and that would give us a T2 target of 3.30. So one more time to recap why we like XLU from the top. We started with our seasonal analysis indicator. If you look at 5 years worth of data, October, November tend to outperform. If you look at 20 years worth of data, October, November tend to outperform. So I have a strong bias inside of XLU that allows me to override us hitting the 1272 extension. I'm managing that with a fairly tight stop. We said our stop was at 83.65 down to about 83.50. Smallish zone, looking for a tight stop below this candle's low. For our T1, we were looking for right below the previous high at 85.95, and our T2 was above our previous high, right near 87.80 up to 88, depending on where you want to take it. If you were to follow that trade plan, that gives you an initial trade ratio, so T1 of risk 1 to make 1.7, and T2 of risk 1 to make 3.88. And of course, these numbers may vary slightly based off of your entry and exit, but gives you a rough idea of how to craft a trade in a fairly liquid ticker with probabilities on your side. All of these were free indicators looking for a swing trade and letting the trade essentially work itself out. We had stops, we had exits, both first and second target, along with a bigger picture move that we have supported with nearly 20 years worth of data. Take care, everyone. Good luck trading, and I'll see you in the next update.